Hello guys, we are from Group 6 and today we will discuss about the accuracy in understanding the VAT restitution procedures. But first, let me introduce our group member. The first one is Anggino Faisya Asmir, and then we have Ardi Kurniawan, and last but not least, it's me, Clara Molina Sibarani, and I will be the first presenter in this topic. The accuracy in understanding the VAT restitution procedure value-added tax or VAT refunds are an integral part of the application of VAT. However, before discussing further more about VAT refunds, it is necessary to first understanding the basic concept of VAT itself as a consumption tax. So the word consumption in the context of VAT as a consumption tax refers to private consumption by the final consumer. So this means that those who bear the burden of VAT are the final consumer. So the mechanism of imposition is through collection by another party appointed by law. A taxable entrepreneur or PKP is a party who is given the responsibility to collect VAT on the delivery of taxable good or BKP and or taxable service or GKP. So as long as the PKP doesn't consume BKP and or GKP, the PKP is not the party that bears in the burden of VAT. So this is reflected in the application of the input tax crediting method to the output tax as a method of imposing VAT, or commonly called the PKPM method. So through this method, the PKP, which is obliged to collect output tax for the submission of the BKP and or GKP, has the right to credit the input tax paid for the acquisition of the BKP and or GKP used in carrying out the business activities. So this right to credit guarantees that PKP is not the party that bears the burden of VAT. So this is what this means by neutrality in the VAT concept, so in which PKP only deposit the excess of the output tax over the input tax. So the next we will discuss about the emergence of excess input tax. So there is a possibility in a tax period the input tax turns out to be greater than the output tax. So this can be happen especially for PKP who carry out export activities. So the excess of this input tax is the PKP right that must be returned by the state. So therefore, when the excess occurs, it is right of the PKP to ask for the excess input that tax to appear immediately. So in the VAT system, in the general, there are three methods that can be used to recover input tax overpayments. And the three methods include: first, restitution; second, compensation for future VAT obligation; and or 3. Compensation for other tax obligation if there is no VAT obligation in the future. So in principle, refunds should be granted as soon as the tax overpayment has been received by the tax authorities. So VAT experts agree on this principle. So many countries, especially developed countries, submit claims for restitution as soon as possible after filing. Even in Luxembourg, although there is no time limit for the return of excess input tax, the tax court in the country states that the completion of the claim of restitution should take no more than 2 months. However, in some countries, restitution often takes months, even more than a year. Restitution is a matter for tax authorities and taxpayers, especially in the case of delay in payment of restitution due to an audit. So the provision of the VAT legislation also require in the interest compensation on the amount of VAT that is not returned within a reasonable period of time as a means of disciplining tax administration. Several countries such as in the South Africa, Singapore, and UK. So that's all from me, and the next discussion will be handled by Anggi. So Anggi, time is yours.
Hello, Assalamualaikum warahmatullahi wabarakatuh. I am Anggino Faisya Asmir and I will continue the presentations. So in addition to Law number 28 of 2007, restitution is also strengthened by Law number 42 of 2009 concerning third companies, on Law number 8 of 1983 concerning value-added tax on goods and service, and sales tax on luxury goods. So the legal basis of the Act is the government's effort to provide information on the requirements for VAT or value-added tax refunds to PKP or pengusaha kena pajak or corporate taxpayer when applying for restitution, which means procedures that can be carried out by PKP includes the first is apply for VAT refunds by fill in the VAT period SPT or mark across in the return or restitution column. Also, if it is not listed, the PKP will make its own application letter. And the next is submit a request for restitution to the DGT through the Tax Service Office or KPP where the PKPP is confirmed. Okay, so the next, waiting for the decision on the preliminary return of excess tax or SKPPKP issued by the DGT at the least 12 months or 1 year. And the next is waiting for return with no later than 1 month from the end of the 12-month period. Okay, so meanwhile there is also the Minister of Finance regulations which is continuously updated as a legal basis for procedures for implementing value-added tax refunds. And it is also referred to as a prelude to excessive tax payment or accelerated tax restitution, which is needs to the legal certainty in paying excess value-added tax, so the PKP can apply for refunds more quickly. Okay, so the next material is about expedited value-added tax refunds. So since April 2018, the government through the DGP has authorized the acceleration of value-added tax refunds in order to reduce cost compliance so that restitution can be given without going through the inspection process first. And prior to that, PKP needs to go through the inspection process by the DGT if they want to get SPKLB, which can take up to 10 months. Therefore, the exercise of accelerated value-added tax refunds makes the process complete in a maximum of 1 month. Okay, so the acceleration is also recognized as the government's effort in optimizing tax audits within the scope of the DGT. In the past, 20 until 30% of the 6,000 officers examined value-added tax, but after the acceleration, 80% of the number of the executor who previously checked value-added tax could focus on the other tax audit. Okay, so how to get accelerated value-added tax refunds? Here there are several criteria for taxpayer who wants to get accelerated value-added tax refund. The first is taxpayers with certain criteria. PKP or pengusaha kena pajak with certain criteria is stated in Article 17C and 17B of the KUP law, which means that the taxpayers must submit a tax return or SPT in a timely manner for 3 tax years. Then taxpayers do not have areas on all types of tax unless they have obtained permission to pay installments or deferred tax payments. So the taxpayers have audited financial statements by a government financial supervisory agency or public accountant with an unqualified opinion for 3 consecutive years. Finally, the taxpayers has never committed a crime in taxation for the last 5 years. Okay, so the second, taxpayer with certain conditions. So PKP submitting a tax period SPT with a value-added tax overpayment of a maximum of 1 billion rupiah can submit an application of the DGT by filling in the preliminary return column in the SPT. And the third is PKP with low risk. So low risk PKP is stated in Article 9 paragraph 4C of the value-added tax law with the following objectives. The first, PKP with shares traded on the Indonesia Stock Exchange or IDX, and the second, PKP with a majority share of the central government or local government, and the third, PKP with the main customs partner in accordance with the PMK rules regarding customs main partner, and the fourth, PKP with certified economic operators in accordance with the rules. Also the fifth, PKP with production activities, attach a statement of production activities, submitting SPT within 12 months in a timely manner. And the next is PKP that meets certain conditions, namely the amount of value-added tax overpayment of 1 billion rupiah. Okay, so however, low-risk PKP will not receive PKP if it is stated that there is no value-added tax overpayment and doesn't complete the notification letter attachment, or there is an incorrect tax payment. Okay, but another thing that needs to be known is that the DGT will check the input tax by ensuring that the credited tax has been reported by the PKP in the submission of tax return, with the PKP making a tax invoice or self-paying input tax that is valid with a state revenue transaction number. Alright, so the next material, it is about deductible expense. So deductible expense is the cost to earn, collect, and maintain income that is deductible on taxable income or gross income. This fee is also deducted by the taxpayer to determine the amount of net income as the basis for calculating income tax. So there are three general principles for an expense to be a deductible expense. The first is these costs are costs related to business activities, and the second is these business activities are carried out to obtain taxable income, and third is the fee is not for personal purpose or interest. Okay, so the next material will explain by my friends Arli Kurniawan. Thank you.
Alright, so we'll talk about deductible expense. Like Angie said, deductible expense is the cost to earn, collect, and maintain income that is deductible on taxable income or gross income. In more detail, referring to Article 6, Paragraph 1 of the Income Tax Law, expense that become deductible expense, including the first one, because costs that are directly or indirectly related to business activities. The first one is about the cost of purchasing material, costs related to work or service, including wage, salaries, honoraria, bonus, gratuities, and allowance given in the form of money. The third one is interest, rent, and royalties, and the last one is insurance premium. Depreciation cost for expense to acquire tangible asset and amortization of expense to acquire right and other costs that have a usable life of more than 1 year. There have five type of deductible expense. The first one is loss in foreign exchange difference, and the second one is the cost of research and development companies carried out in Indonesia. The third one is scholarship, internship, and training fees. And the fourth is about receivables that are clearly uncollectible. And the last one is the taxpayer must submit a list of uncollectible receivables to the Director General of Justice. The requirement as referred to in letter C do not apply to write-off of bad debt from small debtor as referred into Article 4, Paragraph 1. National Disaster Management Donation was provision are regulated in the Minister of Finance Regulation number 76 of 2011. The first one is about donation of research and development conduct in Indonesia, contribution of social infrastructure development costs, and donation of educational facilities, and donation for sport development. In addition, there are also costs that become deductible expense, which are the exception to costs in Article 9 of the Income Tax Law. Meanwhile, Article 9 of the Income Tax Law generally regulates on deductible expense. So the provision of food and beverage can be kind so that non-deductible expense. In addition, there is also the provision of food and beverage, which are actually in kind so that is non-deductible expense. The provision of this food and drink can be deductible expense if it is provided for all employees as per Director General. For example, interest and promotion costs cannot be fully deducted from gross income, but there are separate limitations and conditions. Also, there are many costs that can become deductible expense. So there are, for example, and the cost must still meet the provisions stipulated in the derived rule of the income tax law. This is the last material. Thank you for your attention and goodbye.